Again, market has been on a tear, like since the last time we spoke, we have rallied another 350 points, essentially at record high levels. The big question, of course, everyone is asking, how much further can we go from here on? Is 23,000 the cap, or can we perhaps take out 23,300, 400, 500? What's your opinion of things? How are they looking from your point of view?
Yes, yes. Good morning. Market have a tendency to surprise everyone. As a couple of weeks back, when we are anticipating a consolidation phase, market has been showing its strength, and Nifty has been in a range, in a very positive range from 22,200 to right now we are inching towards 22,700. If market could able to sustain about 22,700, we can expect some more rally in the market. That means market is anticipating the policy continuity and also the earnings season. Market has uh, 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 expecting a positive earnings season, and the earnings are in line with the market expectations. And also the next coming few months, okay, the policy decisions of the new incumbent government, how they are going to take, because there is a anticipation that there will be a policy continuity in the market. And next, we are going to have a full-fledged budget. What are the main things that comes out of the budget? These are the key themes revolving around the market at this point of time. Thanks to the geopolitical issues, they have been de-escalating. Crude has been there was a lot of apprehension for the Indian markets in the initial stage. Crude is going out of the way, but crude is currently in a consolidation phase, and the domestic economy is doing great guns. All the data that is in favor of the market. So all these the domestic parameters have been helping the market to sustain in a positive territory.
Alright, domestic parameters helping markets sustain in positive territory. Also, lack of news from Middle East is being perceived as good news. But coming back to our domestic markets, Kranthi, the recent push has come from banking stocks, and one of the stocks that has been in focus lately is State Bank of India. I mean, SBI has been on a tear lately, right? It has rallied close to 10% in the last 1 week. It's now at record high, and of course, the rally is on the back of reports suggesting that SBI is likely to sell its 25% stake in Yes Bank as a lock-in period has ended in March. As from what we hear, SBI has also received government approval for the same. Now, Kranthi, my question to you is, considering that this sale goes through, do we see more upside in the stock, or is it already priced in? I mean, because we have seen about a 10-12% jump from the recent low in SBI. What's your take?
Uh, Suresh, we need to wait and watch how SBI is going to play its card with respect to S Bank is concerned. Okay, they are in a hurry, or they are going to be in a wait and watch mode. That's what we need to wait and see towards the S Bank as a proposition is concerned. Coming back to the core business of State Bank of India, the core business is going to be very encouraging. What we witnessed, the good numbers, good set of numbers that came from ICICI Bank, in line with that numbers, okay, we can see the same kind of strong set of numbers in State Bank of India. It's more towards the earning, and also the subsidiary businesses of State Bank of India has been doing very well. The bank is in a right shape right now, and I can see some kind of outperformance that's going to continue in State Bank of India in next coming quarters also. But S Bank is going to be one of the tricky issue going to be. We need to see how the State Bank of India going to play the cards with respect to S Bank is concerned. So I don't want to comment with this corporate action at this point of time, but I'm also crossing my fingers how they're going to do, because they are a very strategic investor in S Bank. So how they are going to play the card, we need to wait and watch.
Alright, how they are going to play their card, and we are talking about SBI on Yes Bank stake sale. We need to watch, but also wanted you pick your brains on, considering the recent and the constant interventions by RBI on private bank and NBFCs, would you say that PSU banks are a better play on the banking theme, considering that they are less vulnerable to these regulatory lapses? And I mean, are they really less likely to fall under RBI's scanner in the first place? Kranthi, your thoughts?
Very interesting question she has. So on a longer term perspective, okay, given the kind of the price variation, the earnings variation between the private sector and the public sector banks, what we witnessed in the last couple of quarters, the valuation gap has been bridging up. The gap has been narrowing at this point of time. So, what we can see is the private sector banks, they always, the template for private sector banks has been strong technology and also strong productivity. So, right now, the PSU banks are going one not ahead, and they're improving their technology and the capabilities, and also employee productivity is the key focus area, key KPI for the public sector banks also. So the gap has been narrowing down, and also uh, the banks are quite aggressive in terms of using the technology. That's what helping the public sector banks, and what we can see is that is making them to outperform at this point of time. So if the investors have high risk appetite, one can look into public sector banks on a longer term basis, because the valuation it looks still attractive for many of the public sector banks. Uh, if the investors have a very less risk appetite, okay, they can continue to hold on to the private sector banks. In terms of the compliance is sir, concern, as you rightly mentioned, uh, 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 there will be the banks has to, even though despite of we say what happened in Kotak Mahindra Bank, uh, every bank has to look back their standard operating processes and their compliance regulatory systems are concerned. This is a ongoing exercise, but
Right.
uh, every bank has to revisit the regulatory norms on a day in and day to day basis.
We are in the midst of the earnings season, and Amit, I'll come to you first. No Nifty 50 companies reporting the numbers today, but we have two big ones from the Adani stable. Tell us about them.
The first one, thank you, Suyash. The first one is Adani Energy Solutions. Now that they are supposed to post their results today. According to going by their performance, they have seemingly received a letter of approval for an additional quantity order of 1.7 million meters of pipeline from Maharashtra State Electricity Distribution. This will be worth an additional 2100 crores of rupees. The total pipeline under construction stands at 22.8 million smart meters, consisting of 9 projects with a total contract value of as much as 27,200 crores. In the distribution business, Adani Energy Solutions has sold 2,226 million units in the quarter gone by, as against 2,100 million units in the same quarter last year, owing to the uptick in energy demand. Its share in the renewable power supplied in the Mumbai circle stands at 35%. They're aiming at 60% by financial year 2027. So, all good. Numbers looking good for Adani Energy Solutions. Suyash, I would like to take it to you from here.
All right. And you know, Kranthi, I'll come to you. Now, the stocks, they have Adani stocks, they have pretty much consolidated. I mean, some of them, at least the flagship ones, Adani Enterprises, has not done much. And a lot of us speculated that in this run up to elections, maybe some of these stocks will come into focus. What's your take over here? Are these stocks looking expensive? And let's talk about three in particularly: Adani Enterprises, Adani Ports, which has done phenomenally well actually, and Adani Power. What's your call, sir?
Yeah, majority of these businesses are infrastructure centric businesses. There is some apprehension. These stocks have been high beta stocks, and also we need to see how the results are going to be panned out. These business models are more about futuristic and fully priced in stocks, and also these stocks have a tendency of erratic moves, what we witness in these stocks. But in the last couple of quarters, what we are witnessing is, after these stocks made their bottom, okay, after the saga of entire saga of Edinburgh news has erupted, and the SEBI order, then the Supreme Court decision, these stocks have formed a base at this point of time. Now, here onwards, how their order wins and also the earnings that are going to lead these stocks. But one thing investors need to keep in mind: these stocks have a tendency of moving in making a higher ups and downs for every movement, because of the high beta nature of these stocks. There are some business models quite strong, like Adani ports and all. The valuations are on a longer term perspective. They look attractive, even in terms of their cement businesses are concerned. Adani Transmission is coming. It was earlier called as Adani Transmission, formerly right now Adani Energy Solutions. The stock has corrected and it's forming a base around that 1100 to 1200 range. That's where the stock consolidating at this point of time. So high risk appetite investors, given the kind of the futuristic infra businesses, all these businesses are there in. Uh, uh, One need to continue to hold on to their position, but these stocks are suitable for the high risk appetite investors.
Mr. Bathini, do you see lot of action focused in the in Adani Total Gas with lots happening in the EV space, and they have recently gone into a memorandum of understanding with MG Motors to expand EV charging infrastructure across India. So, do you see lots of action happening in this Adani company in the year to come?
Definitely, how the policy uh, decisions are going to be, we need to wait and watch. A lot of interesting action is taking place in these EV, green hydrogen, and alternative energy spaces are concerned, where Adani Group companies operates, Adani Gas and all. So one need to watch this space interestingly. How the next couple of quarters the policy making towards these sectors are concerned. It is more about futuristic at this point of time. That's the reason investors who have a high risk appetite, one can look into these kind of business models.